Hey family, this is Timalyn Bowens, America's favorite EA, and in today's video, we are going to be covering the W4-P for 2024. Now, last year, this was the most viewed video, but from your comments, I did see that I did leave quite a few things unanswered. So this year in the updated version, I hope that I answer all of those questions. For the time being, I will leave the comments open. Last year the comments got a little unruly, so I did end up turning the comments off for those. So all that I ask is that you please be respectful to one another. Please be respectful to me, and like, by all means, ask your questions, but again, please be respectful. So, this form is for people that will be receiving pension or annuity payments. One of the main reasons I see retirees owe the IRS and they don't know why is because they don't have enough withholding from their pension. That, or they need to have withholding for their Social Security. Now, I covered that in another video in the Senior Sunday series, which I will link at the end of this video. Okay. And I'll also link, is my Social Security taxable? But for right now, let's stay on the W4P. So in this example, I actually use my mother because she is the reason I started this whole retirement and taxes series. So if you would like, you can go ahead and print out a W4P and fill this out alongside me. Okay. So here you will want to put your first name and middle initial. This is for line A of step one. And you want to make sure this matches what is on your social security card. Okay. For the last name, again, you want to put your legal last name, whatever matches your current social security card. Now, you will notice for B, I did make a mistake. I put this in birthday format instead of social security format. So you do need to make sure that you have all of the numbers. Please don't put a birth date here. And just for those of you wondering, this is not my mother's birthday. This is actually a combination of our two birthdays, but you will have 3 digits dash 2 digits dash 4 digits. Okay. Whatever your social security number is, or if you have an ITIN. All right. Now, with the address, you want to make sure that you have the address that matches what's on your tax return. All right. And again, for my mother's safety, this is not her address. However, if you were around my age and grew up in Evansville, Indiana, or even if you're older, you may recognize this address because this was a landmark to the city for a while. That's no longer there. All right. So for this example, we have Linda M. Baker, right? A social security number that is not valid. The address is 720 Southeast 8th Street, Evansville, Indiana, zip code 47713. Now, my mother is married, so for her, we're going to do married filing jointly or qualifying surviving spouse. So a qualifying surviving spouse is going to be if you are a widow or widower and you have a qualifying dependent. Okay, you can use this status for up to 2 years. Now, if you are single, which simply means you are not married or you are married filing separately, you want to check this box here. Okay. Now, if you are the head of household, which means you are unmarried and you pay more than half the cost of maintaining a home for you and a qualifying individual, you would select head of household. Okay. Now, there is an exception to this. If you are married, but you've been separated from your spouse for the last 6 months of the calendar year, you have a qualifying individual, you can still qualify for head of household. Okay. But like I said, in this example, we're going to go with married filing jointly. Now, to figure out the withholding here in step two, I don't want to brush over this. You see here 2A, you can use the estimator at irs.gov W4 app for the most accurate withholding. Okay, people want an exact number. You can get that by going to the IRS website and it will tell you what to put on the lines. But if you're a person that likes to work this out yourself and you have multiple streams of income, by all means, continue to watch the video. If you want to go to the IRS website, have at it and do that, okay? Now, for those of you that don't have multiple streams of income, you will only have your pension, you actually don't have to fill out B. You can actually skip part 2. And if you don't have any dependents, you can skip part 3 and also skip part 4, and you can sign the form and turn it in. But for the majority of you, you'll at least have Social Security income. Okay. So if we're looking at you also having Social Security income, you're going to put the amount of Social Security income that you're going to receive that's less than this pension right here. Okay. Or even if it's more, I said less, Social Security typically is going to be less than your pension, right? Now, in this example, we also have to take into account the spouse because remember, when you are filing as married filing jointly, both of your incomes combined are going to be what the IRS is going to tax. So what this is asking in 2BI, 1I, right? If you and or your spouse have one or more jobs that enter the total taxable annual pay from all jobs, plus any income entered on Form W4, Step 4A, for the jobs less the deductions entered on Form W4, okay? Step 4B. Now, if you're not sure what that is referring to, I do have the W4 series where I filled out a Form W4 for married filing jointly, for single, and for head of household. You can go reference that. In this example here, we are going to just guesstimate that my mom's also going to get 30,000 in Social Security annually. And just to keep things very simple, we'll say that my dad is going to get $50,000, that he's making $50,000 a year. All right. So not too shabby, but not a lot. Don't want to make them rich because I don't want any of you guys to reach out to them asking for $1, right? So in 2BII, if you and or your spouse have any other pensions, annuities that pay less annually than this one, then enter the total annual taxable payments from all lower paying pensions and annuities. Otherwise, enter 0. So in this example, I did leave it blank because we're just going to assume, like I said, this is for my mother. I think my father is going to be working until the day that his body tells him he can't work anymore. So there is no other pension or annuity payment. So in this example, it's 0. Now, if you're filling this out and you were married and your spouse has the lower paying pension or annuity, you're going to want to enter that total annual amount right here. Okay. After you've entered that in, you want to add BI and BII for BIII. All right. So in this example, because this is 0, we just have $80,000 here. Okay. Now, what this is going to do is going to factor in that additional $80,000 for my mother to account for it on the tax return. Because let's say that her pension is going to be only $50,000, right? Well, with that and married filing jointly, this withholding form would only account for $50,000 when in total she's going to have $130,000 before we look at the standard deduction. So she would be way under withheld if we did not add this additional 80. Okay. That's the whole purpose of you filling out this form, is to account for your other streams of income to make sure that your withholding is correct. Okay. Now, if she wanted, instead of adding the $30,000 for Social Security here, She could fill out Form W4V that I did last week. And remember, I'm going to link on the end screen of this video to have voluntary withholding done from the Social Security benefits. That is an option. Or she could have it all taken from here. Okay. And what we're doing right now is going to have it all taken from here. Now, for most retirees, not all, not making a blanket statement, but for most, they're not going to have dependents. Okay. When you're filing your tax return, your spouse is not your dependent. Now, if you have a parent living with you, or if you have a differently able child that you still claim on your tax return, they are going to qualify as a dependent for this $500 credit. So let's say you have a parent and a differently abled child that will be living with you. You would take 2 times this 500 because the credit is $500 and you would have $1,000. Okay. Now keep in mind, you only qualify for this full credit if your combined income married filing jointly is going to be less than $4,000. And in this example that I gave with my mother, hers is going to be less than $400,000. So if that applied to her, we could put the 1,000 here. If by chance she still had a child that was under the age of 17 and her income's under the $400,000 combined with my father's, then she would multiply the $2,000 by 1 and put the 2,000 here. Okay. But in this example, neither of those qualifies. So that's why this is blank and this is blank. Now, when we take into consideration other credits, what is going to happen is if you are eligible for a credit and you know that in the beginning of the year, you can put that on the W4P and you can have less withheld. An example, or the examples they give here, are such as the foreign tax credit or the education tax credit. So, for example, if you are going back to community college to take some classes and you're paying for that out of pocket, you may be eligible for the lifetime learning credit, right? So that's not refundable, but it's still dollar for dollar against your tax liability, which can help lower the amount that you have to withhold. You would put your projected credit here to help with that withholding. But again, none of that applies for my mother. So none of this is filled out. We have a 0 here for step 3 because we don't have any credits for children, dependents, foreign tax credits, or education tax credits. Okay. Now, step 4, this is going to be optional. Let's say that my mother also has some other type of income and I am already reading where I made a boo-boo, okay? So for the other income where tax is not going to be withheld, this is going to include things such as interest, taxable Social Security, and dividends. So let's say we already have my mother's 30,000 included up here. All right. So we don't need to add it in here for the Social Security, but let's say that between interest from her bank accounts and she has a little dividend interest, she's thinking she's gonna make about $1,000. Maybe it's gonna be 750, but just to be safe, I'm giving her a little bit of a buffer here and putting 1,000, okay? The reason we're doing this is because when you have interest from your checking account, and savings account, CDs, they typically aren't going to withhold anything for the IRS. But if you have enough of it, it could affect your tax liability. So we're going to account for it here so that through the pension, there's some extra withholding to cover that $1,000. All right. Now that's optional. You could make estimated tax payments to cover it instead, but in this situation with the W4P, we're going to account for it here. Now here with 4B, I don't have anything for deductions because this is referring to the standard deduction or if you itemize. In this example, we're going to say my mother does not itemize because she does not have any mortgage interest and her charitable contributions are not going to go over the standard deduction for the year. Okay. Because mostly when we see people that itemize, they have a mortgage that they're paying, so they're deducting that interest. They have the state and local taxes, and then they also have the charitable contributions. should you select, instead of, accounting for this 1,000 here, that there's a certain amount that you want withheld from each payment, you would choose that amount. And I reference how to figure this amount in the married filing jointly W-4 video, head of household, and the single one. And you put that amount that you want withheld from each payment right here. So let's say that you had a tax bill of $1,200 this year, right? When you filed, if you want to make sure that you don't owe that same 1,200 next year, you could elect to have an extra $100 withheld from each payment if you're receiving your payments monthly. Now, take into account what time of year it is when you do that, because you need to make sure that that extra amount is being withheld for however many months or payments are left in the year. Okay. So if you receive it monthly and we're already past January, you need to make an adjustment and divide that 1,200 by however many months are left. Okay. So once all of that is completed, you are able to sign this form, date it, and turn it in to whoever the broker is over your annuity or your financial advisor that is handling your pension. As I mentioned before, if you have any questions or comments, please leave them down below in the comment section. If you go to leave a comment and you see that you're unable to, it means that people were not being respectful as they were last year. But like I said, it's a new day, given new chances. If I can be of any help to you with this personally, there is a link at www.bowenstaxsolutions.com, and you can book a call with me to have us actually figure out what your W4P should be for you. And last but not least, it would be remiss of me not to mention this. I see so many people that owe because this is not filled out right, and they find themselves in a place where they can't pay the tax bill. If you need assistance setting up a payment arrangement with the IRS, or even fighting any type of penalties that you've been assessed because you do owe due to your retirement income, you can book a tax relief discovery call with me the same way you can book the pension call by going to www.bowenstaxsolutions.com and hitting book now, and you will see the different options of calls. I hope you found this helpful. Please share with all your retiree friends and family, and have a wonderful day.